Bank deposits with the Central Bank of Nigeria rose sharply by 783.7% year-on-year to 79.8 trillion naira in the first 7 months of the year from 9.03 trillion naira in the corresponding period of 2024, indicating excess liquidity in the banking system. Welcome to Business Point, where we extray the Nigerian economy and the government policies. I am Kike Lomo Okere. The Central Bank of Nigeria has 2 short-term lending windows for banks, namely the standing lending facility and purchase lending. It lends money to bank through the SLF at interest rate of 500 basis points above the monetary policy rate, and also lends money to banks through repo arrangements which involve the purchase of bank security with the agreement to sell back at a specific date and usually for a higher price. On the other hand, the Apex Bank accepts deposits from the banks through its standing deposit facility and it pays an interest rate of monetary policy rate minus 100 basis points. Trend analysis also shows that banks' deposits in SDF surged by 158.4% quarter-on-quarter to 49.68 trillion naira in the second quarter of 2025, from 19.22 trillion naira in the first quarter of 2025. In July, banks' deposits 10.9 trillion naira, down by 29.2% from 15.4 trillion naira in June 2025. In addition to the excess liquidity in banking system, the strong patronage of the standard deposit facility by the banks reflects the effect of CBN's shift to a single-tier remuneration structure to SDF last year. The policy stipulated that all SDF deposits are remunerated as the MPs at the monetary policy rate minus 100 basis points, with the current MPR at 27.5%. This resulted in an SDF rate of 26.5%. On the other hand, bank borrowing through the SLF declined by 11.6% year-on-year to 66.47 trillion naira in the 7 months of 2025 from 75.19 trillion naira in the 7th month of 2024. However, trending analysis shows that banks borrowing through the SLF rose by 61% quarter-on-quarter to 50.46 trillion naira in the second quarter of 2025, from 9.38 trillion naira in the first quarter of 2025 on a monthly basis. Banks borrowing stood at 6.63 trillion naira in July, representing a 245.3% decline from 1.92 trillion naira in June 2025. The decline in banks borrowing from the Central Bank of Nigeria reflects liquidity constraint in the interbank monetary market. The Apex Bank conducted a liquidity mop-up through regular sales of open market operations treasury bills during the period. Finding the Apex Bank shows that CBN sold 11.53 trillion naira worth of OMO TBS in the 7th month of 2025, up from 75.2% from 6.58 trillion naira in 7 months of 2024. Likewise, cost of funds in the interbank money market recorded a significant increase, with the average interest of collateralized lending at 31.6% at the end of July 2025, up from 25.7% at the end of July 2024. The Nigerian stock market continues to dazzle investors in 2025, sustaining its momentum as one of the world's best performing exchange. As the close of trading last week, the all-share index climbed to 134,452.93 basis points, delivering a 30.63% year-to-date gain, nearly matching the impressive 37.65% full-year return in 2024. Market capitalization now stands at 83.07 trillion naira, reflecting strong investors' appetite despite lingering macroeconomic headwinds like inflation and currency swings. So far in 2025, the Nigerian exchange has posted a 31.32% year-to-date return, consolidating the bullish trend that accelerated in early July. The rally has been fueled by stellar earnings report, particularly from the banking and consumer goods sector, where listed firms have demonstrated resilience and stronger profitability in the face of earlier economic pressure. Investors are rewarding this fundamental with renewed confidence, propelling several companies to valuation above the $1 billion mark, with the index recently closing at 137,912.87 basis points, reflecting a 33.99% year-to-date gain and total market capitalization of 87.2 trillion naira. Nigerian equity are not just attracting local participation but also renewed foreign interest. Against this backdrop of the strong performance and resilient corporate earning, the Nigerian listed companies now valued at over $1 billion as of July 2025. Prisco PLC recorded a market capitalization of 1.5 trillion naira, that is $1.00 billion for the July 28, 2025 market trade session. Without December 2024 data for comparison, the valuation shows that companies' importance in Nigeria agribusiness sector benefiting from the robust oil demand and growing food security needs. UAC of Nigerian PLC reported a pre-tax profit of 6.05 billion in the second quarter of 2025, reflecting a modest of 2.3% rise from the 5.91 billion naira recorded in the same period of 2024. This growth pushed the company's half-year pre-tax earning to 11.09 billion naira, according to its latest financial result filed with the Nigerian Exchange. The uptick in the profitability was largely driven by robust top-line growth. Revenue for the second quarter of 2025 surged by 27.42% year-on-year to 54.4 billion naira, while first half revenue reached 110.4 billion naira, marking a 32.62% increase. All of the UAC's revenue came from domestic operation, with 110.2 billion naira generated from customers' contracts, an additional 133.2 million naira from the rental income. Though the cost of sales rose sharply, up from 22.14% to 40.4 billion naira in the second quarter, gross profits still expanded by impressive 45.57%, jumping to 13.9 billion naira. However, the company faced rising overhead, selling and distribution expenses jumped to 40.26% to 3.6 billion naira, while administrative costs rose to 24.30% to 5.2 billion naira. Despite these pressures, UAC operating profits nearly doubled year-on-year, increase by 76.98% to 5.7 billion naira from 3.2 billion naira. Finance costs came in at 2.8 billion naira in the second quarter, but net profit still improved. Profit after tax stood at 4.01 4 billion naira compared to 3.6 billion naira in the same quarter of 2024. On the balance sheet, UAC maintained a solid position with total assets rising to 161.4 billion naira from 157.7 billion naira a year early. Retained earning also grew, reaching 53.1 billion naira, up to 13.49% year-on-year as of the close of trading on July 31, 2025. Shares of the UAC of Nigerian PLC were priced at 80.30 naira, reflecting a year-to-date gain of 155%. The Federal Mortgage Bank of Nigeria raised housing loan approval to 71.5 billion naira in 2024, up from 39.7 billion naira in 2023, marking one of its strongest performance in the recent year. The figures were released by the FBN Managing Director, Shehu Osidi. He says the bank also recovered 18.9 billion naira in delinquent loan in the same period through 7 recovery tax teams established across the country geopolitical zone. In addition, the regular recovery efforts strengthening the bank's financial position, collection under the National Housing Fund increased to 103 billion naira in 2024 from 100 billion naira in 2023. The bank also cleared a backlog of unaudited accounts from 2018 to 2021. Osidi says the bank also improved its loan approval significantly within the same period. According to him, a total sum of 71.5 billion naira loan has been approved compared to 39.7 billion naira in 2023. Beyond financial results, Osidi noted that the Federal Mortgage Bank of Nigeria is providing strong backing for the federal government's renewed Hope Housing Program. It has issued a 100 billion naira off-taker guarantee to support housing projects across the country, committed 19.9 billion naira to the Kasana project in Abuja, and funded 27 billion naira for renewed Hope City in Ibeju, Lekki, Lagos, a development designed to deliver 1,500 2- and 3-bedroom apartments. To expand access to affordable home ownership, the bank plans to roll out the 3 new products from August 2025. Let's take a quick short break. We'll be right back. Don't go away. Stay with us. Welcome back. This is Business Point, where we extract the Nigerian economy and the government policies. The Nigerian Customs Service has reported that the Lily Pond Export Command processed 27,721 containers and non-oil export valued at $1.586 billion between January and June 2025. This represented a 36% increase in export value, which rose by $420.9 million from the $1.165 billion recorded in the same period of 2024. The command also recorded a 200% surge in containers throughput compared to 9,438 containers handled during the first half of 2024. Comptroller Ajibola Odusonya, Customs Area Controller of the Lily Pond Export Command, disclosed this figure at a press conference in Lagos. Odusonya says the figure increased by $420.9 million over $1.165 million recorded in the same period of 2024, representing a 36% growth rate. It says during the period under review, the command processed 27,721 export containers, a rise from the 9,438 containers handled during the same period in 2024. Odusonya explained that exports through the Lily Pond Command were grouped into 4 categories: agricultural products, manufactured goods, solid minerals, and others. Agricultural produce remained dominant with a total value of $966.7 million, significantly higher than $288.83 million in the same period of 2024. For manufactured goods, the command processed exports worth 2.083 trillion naira in the first half of 2025, reflecting a substantial increase from 170 million naira recorded a year earlier. Odusonya says this growth signaled an improvement in the Nigeria's industrial output and diversification efforts under the Nigerian Export Supervision Scheme, which mandates a statutory fee on all legitimate goods exported from Nigeria. The Lily Pond Export Command collected 12 billion naira in 6 months compared to 2.617 billion naira recorded in the same period of 2024. Odusonya attributed the improved performance to the command's position as a hub for non-oil exports, better compliance by exporters, and the support of the Comptroller General of Customs, Bashir Adewale Adeniyi, who has created an enabling environment for trade facilitation. He noted that the command has been working closely with other regulators agencies to ensure smooth and lawful export processing. Looking ahead, he expressed optimism that with the adoption of the digital tools such as Bodogo platform, the command will record even greater achievements. He urged exporters, freight forwarders, operators to remain compliant and take advantage of the command's open door policy. The average retail price for refilling a 5 kg cylinder of liquefied petroleum gas, cooking gas, rose by 1.92% month-on-month from 8,167.43 naira in May to 8,323.95 naira in June 2025. These figures were disclosed in the latest report released by the National Bureau of Statistics titled Liquefied Petroleum Gas, that is, Cooking Gas Price Watch. The price says the average price of 5 kg of cooking gas rose by 1.92% to 8,323.95 naira from 8,167.43 naira in May. On a year-on-year basis, this marks a 19.49% increase from 6,966.03 in June 2024. Delta State recorded the highest average price at 9,243 naira, while Oyo had the lowest at 7,100 naira. Regionally, the South-South zone had the highest average price at 8,871 naira, and the Southwest the lowest at 7,916 naira. Similarly, the average price of 12.5 kg of cooking gas increased by 1.4% to 21,010 naira in June compared to 20,709 naira in May 2025. This represents a 33.52% 2% year-on-year rise from 15,736 naira in June 2024. Similarly, the average retail price for refilling a 12.5 kg cylinder of liquefied petroleum gas increased by 2.18% on a month-on-month basis from 20,268 naira in April 2025 to 20,709 naira in May 2025. On a year-on-year basis, this rose by 32.52% from 15,627 naira in May 2024. According to the report, Abia State recorded the highest average price for refilling a 5 kg cylinder of liquefied petroleum gas with 9,181 naira, followed by Ebonyi with 9,177 naira and Rivers with 9,174 naira. On the other hand, Oyo recorded the lowest with 7,116 naira, followed by Niger and Plateau State with 7,142 naira and 7,177 naira respectively. For 5 kg, similarly in Delta State recorded the highest average retail price for the refilling of 12.5 kg cylinder of cooking gas with 23,356 naira, followed by Abia with 22,953 naira and Ebonyi with 22,943 naira. Conversely, the lowest average price was recorded in Yobe with 18,500, followed by Lagos and Kebbi with 18,536 naira and 18,606 naira respectively. The NBS reports that Nigerian headline inflation rate eased at 22.22% in June 2025, down from 22.97% recorded in May 2025. The NBS stated that the survey was conducted by over 700 NBS staff in all states of the Federation. The Petroleum Product Retail Outlet Owner Association of Nigeria has faulted the decision of the National Petroleum Company Limited not to privatize the Port Harcourt Refining Company. In a statement by Petrotan spokesman Joseph Obele expressed the association's disappointment with the decision by the NNPCL to retain the refinery under its control and called on President Bola Ahmed Tinubu to approve the privatization of the refinery, saying it will drive efficiency, investment and economic growth. He criticized NNPCL's handling of the country's refinery, saying it had led to fuel scarcity, higher prices and economic hardship, and added that its poor track record shows the need for reform. According to Obele, privatizing the Port Harcourt refinery will bring benefits such as increased productivity, investments, expertise, job creation and better product supply. Recall that the Group Chief Executive Officer of the NNPCL, Bayo Ojulari, 2 days ago announced the organization's decision not to sell off the refinery during a company-wide town hall meeting at the firm headquarters in Abuja, reaffirming commitment to completing the high-grade rehabilitation and retention of the plant. His latest announcement amounts to a reversal of position, as he says in June that the company is considering the sales of the 3 refineries due to complication in repairing them. However, Ojulari says the position of the National Oil Company is not a shift, but informed by the ongoing detailed technical and financial review of the Port Harcourt, Kaduna and Warri refinery. Alright, this is where we draw the curtain on Business Point today. Join me again on Monday on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms at Global TV NG. Till I come your way again, I am Kike Lomo Okere. I celebrate you all.